Tax lien investing, pros and cons. Hi, I'm Phil Pustiowski with freedommentor.com. I'm a real estate mentor, full-time investor, author of the book How to Be a Real Estate Investor, which recently hit #1 on Amazon, bestseller. And in this video, I am going to break down on a more 30,000-foot view the pros and the cons of tax lien or tax lien certificate investing. What's a tax lien? In simple terms, it is when a person does not pay their property taxes. What happens is the county, as opposed to, say, hiring a collections firm and bugging the heck out of that homeowner, instead what they do is they literally ask investors to pay the person's bill. And what the investor gets in return is a tax lien certificate from the city or from the county that states that they're not only going to get their original investment back, and you know, the typical cost of somebody's property taxes for a year, and you could probably figure it out for your own area, you know, it's $1,000, $3,000, $5,000, $8,000, depending on the area. So not only do you get the original investment, because you basically paid that homeowner's bill, because the county needs money. So you paid their bill, so you not only are going to get that money back, but you're also going to get an interest rate or a rate of return. Now, the first key lesson that you need to be aware of when it comes to tax lien investing is that it's very area specific. The rules are completely different from county to county to state. Very, very different. Now, each state has like certain, I would say, global rules, but then on a more county specific level, there's even more greater details of rules. And so what that means is every area is different. Some are going to be better than others. And what I mean by better is the ability to get more of a rate of return. Okay, that's where the better comes in. And then in some cases it can be easier than in others to actually become the owner of the property if the person doesn't pay back their taxes. So that's where we're going to move this conversation, because this gets real interesting in the real world. And by the way, what I'm going to share with you is not regurgitated from a book or another training. This is what we have discovered over a lifetime of experience. And I'll give you one more disclaimer. I personally do not buy tax liens, okay? So I'm not saying that necessarily jades me one way or the other, because I have friends that own over $500,000 in tax liens each year. They buy them and then the other ones get paid off and they just go buy more. So I know the pros and cons, and I'm going to talk about those, and you'll also learn why I don't invest in them. Okay, so tax liens, or tax lien certificates, they're going to be in that $2,000 to $5,000, $8,000 kind of range. Now, sometimes it's a big commercial property, and it might be like $100,000 or $150,000, but in most cases it's not. Let's talk about how you get there. Well, you get there if somebody doesn't pay their property taxes. Who's most likely not to pay their property taxes? Number one are the people that don't have a loan against the property. So that's a pro, okay? So on the pro side is that you're going to get some properties that potentially have equity, okay? I'm going to come back to this too. There's two reasons why this is helpful. So a lot of the time, these properties don't have a loan on them. Why? Because a lot of the people that get a loan or a home loan to buy a property, typically the mortgage company is paying the taxes each year and the insurance. And even if the homeowner doesn't even pay their mortgage, the bank still pays the property taxes and the insurance. So typically, when there's a loan against a property, typically the taxes are being paid, and you won't see these property tax lien issues. But if the property is owned free and clear, you definitely can run into that. Now, what kind of properties are owned free and clear? Obviously, you have those that have been owned a long time by one owner and they've paid off the loan. You see where sometimes the property gets inherited by an heir, and those are the most likely ones not to pay the taxes because they just inherited this wonderful property, but they may not have the extra $6,000 a year to pay the taxes. There's other ones as well. What about the don't wanters? What about the properties that they don't want? So one of the cons is you've got to be very careful about I would call them misfits. These are properties that the owner just doesn't want. Maybe it's some weird sliver of land that's completely landlocked, and it's just a whole bunch of undeveloped trees or something, and it would not only be difficult to sell the trees to a logging company, but you couldn't even get in there because it's landlocked. I mean, this happens a lot. So many of these properties are weird misfits. They're slivers of land, raw land, vacant land, things that the owner themselves don't want. And so they look at it and say, well, who cares? I'm not going to pay $2,000 a year for this property. Let the city take it back. I'm not paying nothing. And so some of these properties just stay in this perpetual cycle of nobody wanting it. And and sometimes the city actually takes them over. Nobody actually ends up paying the taxes. Nobody buys it at the tax deed sale, and voila, the city becomes the owner. So you get these misfits. And what happens is there's usually a period of like 2 to 3 years. So if you don't pay your taxes the first year, a tax lien gets issued. Then the next year, if you don't pay, a new tax lien certificate gets issued. Now that gets important, because if you buy the first one on year one for, let's say, $3,000, but you don't have money next year to invest in that one, well, then you get put on the back of the line in case the owner never redeems or pays back the back taxes. You can put you in an inferior line or role to potentially become the owner of the property, which is a small segment of this overall investing strategy. Is that if you do pay for the tax lien certificates, you have the option of potentially becoming the owner. But that's going to depend on the state. Because I know in my area, here in Florida, what happens is if the person doesn't pay their taxes for, say, 3 years, what's going to happen is it's going to go to a tax deed foreclosure auction. So the only way I'd get it back as being the tax lien owner is if nobody bids at the auction, which is kind of scary. Because what that means is nobody wanted it. And then all of a sudden, I'm stuck with a property that I don't want, that I got to now pay taxes on, that nobody wanted to buy at the auction. So this goes back to this con. You could get, potentially, you get stuck with one of these. So that means that if you're interested in investing in tax liens, you're obviously going to have to evaluate each property individually to see which one you want to potentially buy the tax lien certificate for. Now, in my area, they issue the list once a year. There are 21,000 tax lien certificates that they sell in a year. And they do it once a year. So that means you have to cull through all 20,000. Now, maybe you have a budget of, say, 20 grand in a year that you want to invest in these kinds of things. So I guess you would just go down the list until you hit about the first 20. But remember, you may lose on that auction. So you've got to have some backups. So one of the, and I don't know if this is a pro or a con, but part of this is that you're going to have to evaluate before you make the decision to put the money into a tax lien certificate. Because you need to know what it is that you're putting this money against. And if you're putting that money against some weird sliver of property, you may end up with it. And you don't want that. Because if nobody else can buy it at the auction, you don't want it. Now in other cases, in other states, you may want the property. And now this is where things get really interesting. Another potential con of this is going to be competition. Okay, so obviously, if it's such a good idea, everybody's going to do it. Well, this requires some real money. You got to have some money if you're going to buy tax liens. So the competition is typically banks, like local banks, hedge funds. And here's what they do. They cherry pick usually for the single family homes, or the single family homes or properties that have a big mortgage on there. Because if the tax lien doesn't get paid after, say, 2 or 3 years, depends on the area, potentially that mortgage could get wiped out. So these mortgage companies will come in and make sure and pay the tax lien right before the tax deed sale. So banks, hedge funds, they love this because, maybe they get 2, 4, 6, 8% on their money. Maybe you've heard there's places in this country that'll give up to 20% guaranteed rates of return, or 25%. Well, that's where the bidding usually starts. And then it usually bids down. And so you're bidding against other people on the interest rate. So the interest rate may land on 6% or 8% or maybe 10. So, but again, it depends on the area. And again, this is where we get a little technical, because you have to, each area is just so much different than the next that you have to know the rules. And we'll talk about how you figure out the rules here at the end. So you're going to have competition. And that can be a challenge as well, because you're going to be dealing with people that have been doing this a very long time and know a lot more about this than you do. So that's a big con about this whole thing, is making sure you can weave and bob in and out of the competitors. And remember, these competitors probably have a lot more money than you, especially these banks and hedge funds. I mean, they may have like unlimited funds to buy these things. So it also depends on the property and what's going to happen with it. So again, like I said, a weird sliver of land, that's a little bit more of a red flag. But a single family home with a big fat first mortgage on there, you know it's probably going to get redeemed. If not by the homeowner, at least the bank's going to pay back that money before it goes to foreclosure and they lose their first mortgage. So if that's your goal, great. But then your goal might be to try to pick off a couple of these properties. So then you're going to want to take the approach of finding the deals that are least likely to get redeemed. And how do you do that? Now I'm going to give you some really good tips here. The first is, go to these tax auctions for a while. If you have any interest in investing in tax liens, study them. Study who's there. I know in my area, typically there's 3 companies that buy like all of them. They do it all across Florida. There's 3 big companies and they buy them all. And so that's their business though. So figure out who the competition is, what they're doing, and study it. Study what happens to these properties. Study, and you can do all this, and it's going to take time. But you notice I'm not telling you to go buy some course on tax lien investing. I'm telling you to go study your local knowledge, because that's where the wisdom is. I think it's also a good idea for you to go talk to an attorney that handles tax foreclosures. So in other words, if you are the tax lien owner and you need to get your money back and they didn't pay you, oftentimes you can file for a quiet title or for a tax foreclosure. Find out who's handling those and learn from them. There's going to be some local providers that handle this for the people that are there right now. In fact, if you went to an auction, you asked around, what attorney to use, what title company to use, because one con can be getting clear title. Getting clear title can be a challenge in certain states and certain areas. In Tennessee, it was a very big problem. In Florida, there's actually some closing companies that just focus on clear title for tax foreclosures. So you'll have to definitely get a better understanding, and that's where these local service providers can give you some great wisdom on this subject. Again, you can really dig in and learn what's going on. And again, like I said before, it's much better if you know the property you're dealing with. So I don't know if this is a con or not, because every investment you've got to verify if it's a good idea. But I guess the part of the con is just that you have to go through so many to find a few that are going to be winners, that are going to be a good use of time. You're definitely going to have money. Okay, this is not a game for no money, no cash down, creative financing stuff. You got to have the money. Now, I personally don't put my own money into it, because I can use that money and make a lot more deals out of it. So in other words, if I was going to take $10,000 and throw it at a tax lien, I could take that same $10,000, give it to a homeowner, of somebody who has to absolutely get out of their house today, and then I could turn around property, and flip that property for a lot more than I put in, so I can get a much better rate of return. However, I know people that have been, ex-venture capitalists, ex-investment bankers, and they're sitting on several $1 million, and so they don't want to, they don't want the hands-on that's required that I do when I'm doing my regular investing. So they just go buy a bunch of tax liens, and maybe they get 6 to 8% on their money. They focus on single families that they know they're going to get redeemed. They don't have to worry about getting the property back, and that's the way they roll. So, what's a pro? In a lot of cases, I'm going to argue it's hands-off. Now, it's not hands-off in the beginning when you have to actually choose which one you're buying, but it becomes hands-off once you buy it. You set it, you forget it, you move on. So that's definitely a benefit. And I suppose we need to talk about the pro of a guaranteed, interest rate. That's nice. But I am also going to argue it's a lot like a bank CD. A bank CD meaning you buy it, and then you're going to have to wait a couple of years before you can get back to it. My brother is a financial planner, and he would call it liquidity. not very liquid. Because once you buy it, you're going to have to sit on it. And, you know, you could even sit on that thing for 3 years before you end up getting your money back. But it's a good rate of return, right? So it's not all bad. All right, so those are really the pros and the cons of tax lien investing. Now, like I said, I don't do it because I have a better place to put my money. I do like to check out those tax deed auctions in the states that they do have them. That can be a good little niche. And where they get really nice is this. When you get a situation where somebody passed away and the probate hadn't been handled all the way, or they haven't fully transferred the assets over to the heirs, or there's some sort of disagreement, and meanwhile it's barreling towards a tax foreclosure, maybe it goes to tax foreclosure, and shoot, you have to compete against the other guys who are bidding at the tax deed sale. But sometimes you can get a pretty good deal there, and that can be a great little option. That's gonna be, you know, that's where I'd rather be in the game, is more on that side, because I'm okay with the hands-on. You know, I don't need hands-off because I'm already in the flow of deals every day. So I want to be in the flow so that, you know, I don't want to get 6 or 8% return on my money. I want to do a lot better than that in a year. That's for sure. And again, certain parts of the country may do a little bit better. So I hope you enjoyed this video, and hopefully I share with you some insights that you wouldn't hear in other places, because this comes from the School of Hard Knocks, and we've just been through this so many times. We know where the benefits are. And I'll say this, you know, and I've talked about it earlier in this video, it's all about local. So if you study this thing long enough in your local area, talk to enough professionals who are doing it, you'll eventually begin to see where the opportunities are. And that's the key. It's about knowing what's going on locally, asking a lot of professionals in that area, and finally digging into what's going on. Now, maybe the guys at the auction that are bidding may not want to help you, but if you knock loud enough and long enough, you'll eventually wake somebody up. All right, well, I'm Bill Pustiowski with FreedomMentor.com. If you love this video, if you have any questions, if you have any disagreements, you know, make some notes just below here and in the comment section, and I try to take out time to answer those comments and to be a part of the conversation. And also pick up my book, How to Be a Real Estate Investor. You can get it on Amazon. You can get it on my website, a digital version for free, actually. And I also talked a lot about tax lien investing in there in a certain section, the benefits, the pros, the cons, that sort of thing, going a lot more in depth than just this video. All right, thanks so much for watching. Have a great day.